Bonds are an essential piece of a well-diversified portfolio, but understanding which bonds, or bond ETFs, to choose can feel complex. The key is to focus on your goals, risk tolerance, and time horizon. Here's a simple breakdown to help you decide. Bonds come in different flavors. Government bonds, like US Treasuries, are some of the safest options. They're ideal if you value stability and are looking to preserve capital. Treasury ETFs, such as those that track short-term or long-term bonds, can be a reliable choice. Corporate bonds are issued by companies and typically offer higher yields than government bonds to compensate for slightly higher risk. If you're comfortable taking on a bit more risk for more income, corporate bond ETFs might be worth considering. Just be sure to look for investment-grade options for additional safety. Municipal bonds, or munis, are often tax-exempt, making them attractive if you're in a high-income tax bracket. ETFs focusing on munis can help you take advantage of these tax benefits, particularly if you live in a high-tax state. International bonds provide a layer of global diversification. There's a bit more currency and geopolitical risk involved, but they can complement a US-focused portfolio really well. Look for ETFs that track a mix of global government and corporate bonds. When evaluating bond ETFs, there are 3 factors to consider. Duration refers to the average maturity of the bonds in the fund. Shorter durations are less sensitive to interest rate changes, while longer durations offer higher yields but come with more risk when rates move. Then there's credit quality. Investment-grade bonds might be safer, whereas high-yield or junk bonds can offer higher returns but at a much greater risk. Just like with other ETFs, you also want to keep an eye on expense ratios to ensure you're not overpaying. So what's the takeaway? Your bond investments should match your overall financial goals. Are you saving for something short-term, or are you focused on steady income in retirement? By choosing bond ETFs that align with your needs and risk tolerance, you can make bonds work as a powerful stabilizer in your portfolio and even use them to boost your returns in specific scenarios. Bonds might not be flashy, but the right ones can provide security, balance, and consistent returns, making them a valuable part of your financial strategy.